please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. It's an all-important day for the markets. All days are important for traders, I would assume, but it's Friday. We came very close to all-time highs for the Nifty, within 1% of all-time highs. We conquered all-time highs on the Sensex, and then there was that bit of selling. So very important to hear what our tech gurus have to say. Ashwani Gujral, Mitesh Thakkar and Prakash Gaba are with us now. Good morning, gentlemen. Ashwani, you were apprehensive that yesterday the heavy lifting was done by only a few stocks. Today, the global tailwind is still there. A lower inflation tailwind is still there. What thoughts?
Well, good morning. And, at all-time highs, the market does not cross them very easily. So you could again have this first half, 2-3 hour rally. But, even if we do cross yesterday's high, but market dithers after that, and, immediately the mid-caps start to sell off, this situation cannot continue. So, everything either participates or, once this large cap gas is over, then you will not have the market bet supporting a fresh high. Inflation, I'm not so clear, because yesterday's crude fall meant inflation. So, at higher levels, if good news stops getting responded to, that's a first sign where, there could be some trouble, at least intraday, that could happen. And even sometimes, markets top out when the news is becoming good, because you are at 11,050. So that people should remember, because getting in at 10,700, 750 was a good plan. Right now, risk reward is kind of skewed, because every day one particular stock goes up 6-7%. How long that situation can sustain? So that's the broad view. I want to trade ranges. I want to see the market fail at 11,060. Now, this is not a prediction. If it happens, that's what I'm looking to trade. So that people should remember. Even on Bank Nifty, anything close to say 27,100, 150, I want the market to turn and then take the other side.
Okay, so Nifty Bank 26,850, 27,150. Yeah.
Okay, so let's get Mitesh Thakkar and Prakash Gaba also on board. Mitesh, morning. The leaders of this market, the two leaders, IT and banks, have both started to perform now. You think that's enough to take the markets to much higher levels above the record highs of 11,170?
Good morning. So I think, while there has been complaints of narrow participation, and mid-cap pack certainly hasn't kind of really joined the party on the upside. But I think, as you rightly pointed out, couple of indices, and especially the heavyweights, the frontliners amongst those sectors, are doing extremely well. I believe that eventually, I think this should lead us to higher levels, given the fact that these stocks typically enjoy good weightage in the overall index calculations. But I think, 11,070 is something which I have been highlighting for the last few days as an important level. I think we've just hit those levels. Some supply, some consolidation will happen, given the fact that we've had about 5 days of an up move and we've gained about 400 points. So I think, I would agree with Ashwani. I'm looking at a range developing possibly, but the idea is to trade more on the long side and buy on the intraday dips, which can happen. And I think eventually the highest closing of 11,130 should be tested, possibly scaled on the upside.
Okay, scaled on the upside. Okay, let's watch how the first hour plays out. Prakash, good morning to you. Your range.
Good morning.
And your trade.
Basically, when I look at the chart, it tells me the trend is still intact up as long as 10,950 holds. But what we have seen is today is Friday the 13th, plus 4 gap ups. Now, I'm not very comfortable with 4 gap ups. I see some kind of an exhaustion here. What we saw yesterday was some kind of selling pressure or exhaustion in the upper regions, or fatigue, that is, you might like to call it, in the upper regions. So if there is a sideways zone, possible that could happen. The trend is still intact up, but there would be selling pressure in the upper regions. The upper range that I have is 11,070 to 11,090. It stalled there yesterday. I think it could stall here as well. It's been a previous stop also. It's not very easy to take out this high so easily. If it has to take out this high so easily, it needs to rest here for a while. I think there's a time for a rest here. And as far as Bank Nifty is concerned, I have a very important level, a crucial level of 26,860, as long as the whole trend is still intact up. But here too, I have seen gaps, so I would want some kind of fatigue to play out here in the sideways zone, and let's be stock specific on that.
Okay, well, that's our cue, right, to move to stock-specific ideas. Ashwini, from the heavyweights, I notice you have names like Bajaj, Finserv, L&T. You stick with some of these, stocks that have been hitting new highs, and what else are you looking at?
See, one strategy that people can do is go long the large caps and short the mid caps. So that can play out, and that'll help you ride upside on the indices if there is any. But the way these mid caps start to fall midday, that creates an opportunity on the downside as well, because anything that hasn't participated in the upside, chances are when the downside starts, those stocks will underperform. So PC Jeweler is a sell with a stop of 124, target of 112. Again, selling has started here. For all the inflation, the PSU banks made fresh lows. So Bank of India is a sell with a stop of 87, target of 80. Sun TV is a sell with a stop of 792, target of 770. Bajaj Finserv, Bajaj Group, if I have to buy two financials, both these guys, Bajaj Finance and Finserv, continue to move up. They moved up even when inflation moved up. So these are sort of stocks you want to be long on. So Bajaj Finserv is a buy with a stop of 6200, target of 6450. And Larsen is a buy with a stop of 1285, target of 1340.
Okay, well, there is some fundamental tailwind, Ashwini. I mean, I'm not saying that that's all that important, but yeah, IIP numbers for capital goods came in good, so that also should help, I would assume. Mitesh, what would you trade?
So I have a Bajaj stock as well, Bajaj Finance, and I, in fact, like both of them, I've just picked up Bajaj Finance. It's given a good swing breakout, so as long as it's about 23.95 and keep 23.94 as your stop loss, I think there's a chance that the stock will make newer highs, and I would look at a first target of 24.60. Biocon is a sell call. The indicator setup is turning quite negative here, so I would sell with a stop at 625, look for targets close to about 585. Two more buy calls. Karnataka Bank has just managed to cross about the declining channel. I believe there's some news flow regarding quarterly numbers as well. But for the timing, the chart pattern looks good, so keep a stop at 121. If the stock can head towards 130, possibly 135 over the next few days. And MRF looks very promising. There's a good breakout from a contracting consolidation here. I would buy with a stop at 76,400, look for a first target of 80,000.
Okay, MRF, yes, that stock has been on a tear lately. But Prakash, what about you? What are you looking at?
Very few stocks, Sonia, to look at it from the long side, from the large cap. So I picked up Bajaj Finance as well, financial Finserv. I think it can climb to around 6375 zones, stop below 6,200. I didn't have L&T, I have Wipro. I think Wipro can climb to levels closer to around 290 zones, stop below 274. I too have Biocon, looks weak, more of an exhaustion pattern here, fatigue is set in here, can see a slide to around 587, stop about 625. I picked up UPL as well. It's broken down structure. Looks like UPL can see a slide to around 550 zones, stop about 590.
Okay, actually, just one more quick question to Ashwini before we get to the other experts. Reliance is, I mean, it's a huge rally that we saw this week, 10% higher. Ashwini, today, how does one handle this? There will be people sitting with long positions. At any point, would you say profit taking, depending on the pattern of the first hour or so?
See, if a large cap stock has given you 10% in a week, and if people got in at 850, 900, the common sense approach should be to take at least half your profits off, because when this sort of expansion happens, that generally is the sometimes culmination of the move, because Reliance rally started from 500. From 500 it's almost doubled, and in less than 1 year. So these sort of large moves, if you get another big move today, start booking some profits, because all stocks correct, and it's moving way away from moving averages. That for a large stock sometimes is not sustainable.
Okay, we'll come back and talk about these names. Yes, 45% rally in Reliance in the last 12 months. It's something that we haven't seen in a long time. But standard disclaimer there, Reliance owns the channels you're watching. But let's talk about the strong quarter that TCS had. The attention will now turn to Infosys. Sandeep Agarwal of Edelweiss joins in to talk about his expectations. Sandeep, hi, good morning and thanks for speaking with us. Currently, Infi is trading at almost a 35% discount to TCS. One, how do you expect the numbers to shape up? And two, do you think this valuation gap will narrow post-earnings?
So, see, I think it needs to be seen like this. TCS has reported numbers. They have got momentum already. And, you know, even on the TCS result day, I have clearly said that we will see BFSI turnaround. I am not negative at all on the sector. I maintain my view because, as I have repeated earlier, also ground zero Bay Area, when I went, there was massive optimism on the demand, and we do, you know, regular surveys, and what we are still getting inputs is that, you know, there could be a quarter lag here and there in different companies' performance, but, you know, there is a massive revival in demand. There is no doubt about it. And if there is a massive demand, everyone will benefit. We just need to be careful for some of the mid-cap companies who will be able to retain the people or not. So that is the challenge. Otherwise, I think it is okay. For Infosys, we are again very aggressive. We are expecting growth of 2.3% in dollar terms, which is around 3%, 3.2% in constant currency, which is an aggressive number. But I would again recommend that if there is a small blip here and there, you should accumulate the stock and from a long-term perspective.
You know, congratulations, Sandeep. You really were in a different orbit with your expectations on TCS. I remember you telling us in the morning that you were expecting an over 4% constant currency, and lo and behold, you were right. But what is your price target? Will you only buy Infosys on dips if it were to deliver that strong number you're saying?
No, if it delivers the strong number, I think then you will not be able to buy on dips. There will not be much opportunity from the dip side. But, you know, Infosys being Infosys, and, you know, there has a lot more consultancy component. So there generally is a quarterly volatility. And second, we must appreciate the fact that TCS has first half very, very strong compared to second half. So, you know, we have to basically keep that also in mind. So I think that, you know, if this number comes, what I am expecting, then definitely there will be no dip in near term. But, you know, I will not be very
Your own price target is my point.
So, see, we are now assigning 20 times. So, it is around 1640 odd price target, which is there. So, let's see. But I think that we have to see it from a 1 or 2 year perspective. There is a massive demand revival, and we should keep in mind that point.
Okay. I also wanted your thoughts on what the guidance could look like. Do you think Infosys would maintain that FY19 guidance of 6.8% constant currency growth? Or given that the trend has picked up, maybe there could be an improvement in the guidance as well?
So I will put it this way. See, Infosys being a conservative management will not probably tinker around with the constant currency guidance. But I think the commentary will be much better than earlier. That is the way I would put.
Okay, what about Cyient? Just a last thought. Do you track that stock? And are you disappointed? What are your price targets now?
I am not at all disappointed, primarily because, see, the miss is around $1 million, $1.5 million on the top line and the EBITDA level, and PAT level there is a bigger disappointment. There are some one-offs as mentioned by the management. See, again for Cyient, as I have mentioned earlier, we have to see the ER&D space. It is the best growing industry right now, where there is very low penetration of outsourcing, and I see this industry to be a big trend for next 5 to 10 years. So all the companies which are there in this industry, like L&T Technology Service, Cyient, and Persistent, should be seen it from. We should see it from long-term perspective. And I think that this quarterly blips should be not be, you know, should see it from long-term perspective. I am sure that, you know, a small blip will be recovered in next few quarters.
Okay, thank you very much. Those look like prophetic words, and we hope that's right. Thank you very much, Sandeep, for joining us. We'll touch base after the numbers.
Okay, all right. So let's do one thing. Let's take a short break on that note. We still have 15 minutes before the pre-opening rates kick in. Chandan Taparia will be with us to give us some F&O trades on the other side.
सुनो, टिम के पापा के लिए ये हैट कैसे रहेगा?
ऑनलाइन? पागल हो गई हो क्या?
क्यों?
पेपैल है पापा, सेफ है।
पेपैल?
Beta. Hello, Namaste.
We have something small for you.
Oh, wow. And we got something as well?
Pashmina from India.
Yeah, right.
Online.
Yes, online.
Ah, PayPal.
PayPal, yeah.
Safe, eh?
Accepted by 19 million merchants across 200 markets. PayPal.
Safe, eh?
Hi, welcome back. With the market virtually at all-time highs, how do you approach the day today, given that it's Friday? It's Friday the 13th, but I don't think bulls care too much about that, right? Chandan Taparia of Motilal Oswal Securities joins us now. Chandan, hi, good morning. What would be the trades on the index today?
Yes, Nifty is continuously making higher highs, higher lows from last 8 trading session. So till this momentum continues, one can continue to be with long position for an up move towards new lifetime high of 11,171 kind of level. We have seen a sharp surge in the put-call ratio, and now PCR is at 1.77 level, which clearly indicates that put writers are quite comfortable in the market. We have seen fresh put writing at 11,000 strike, where open interest added near to 15 lakh shares. So which indicates that now 10,929 is likely to act as a major support, while on the upside this rally can extend to new lifetime of 11,171 kind of level. So till it holds the major support, traders or the new investor are suggested to continue to be with long position. We have seen buying interest in many heavyweights counter, including Reliance, TCS, Bajaj Finance, Asian Paint, HUL, HDFC Limited, HDFC Bank, and these stocks are likely to continue their positive momentum even for next couple of trading sessions. Now talking about the trading calls, first trade is buy on Bajaj Finance. This stock has given a breakout from its pole and flag pattern, and this pole and flag is really working well for this stock. Overall, this is continuously making higher tops, higher bottom formation. It is up by around 8 to 9% in the entire series. Built up of long position is there by around 25 to 30%, which indicates that fresh leg of rally could extend and the momentum may cheer the market sentiment also. So recommending to go long with a stop loss of 23.80 for an upside target towards 2515 kind of level. Second trade is buy on Mindtree. We have seen the strong momentum in most of the IT counter. We have seen the strong momentum in TCS, NIT, KPIT, and now I believe that Mindtree could see the fresh breakout zone. It has seen the sharp spurt in the trading volume and the open interest activity in last 2 to 3 trading sessions, and put writing is also visible in the counter, which indicates that fresh leg of rally cannot be ruled out. On weekly scale, it is giving the breakout from its pole and flag pattern. So positive momentum cannot be ruled out towards 1135. One can buy with a stop loss of 1050 level. Third trade, that is on the sell side. As mentioned, that Nifty is heading to new lifetime high territory, but there are many PSU, mid-cap and selective auto counter which are continuously hit their lower top, lower bottom formation. So I have negative sentiment on most of the PSU bank. So Union Bank is sell call from our side. Keep a stop loss of 82. This stock can drift to our 73 levels. This stock is continuously making lower top, lower bottom and trading at 14 years low level, which clearly indicates the nervousness and the weakness of the counter. One more trade on the LNT, where we are going with the option side. This stock has recently bottomed out, and in line with buying interest in selective heavyweights, LNT could join the rally towards 1330, 1340 kind of zone. But overall, the momentum is quite slow in the counter. That's why we are recommending to be with bull call spread, buy one lot of 1300 call, sell one lot of 1340 call. In the entire strategy, one has to pay the premium of 13 points, keep a stop loss of 5 for upside target of 28 spread. So 1:2 risk reward ratio, and expecting LN to head towards 1330 to 1340 zone in next couple of trading sessions.
Okay, thank you very much for that. So still negative on public sector banks. Thank you very much, Chandan, for all your data. Let's get to the data now. The macroeconomic data we got last week, both inflation and industrial output, were a mixed bag. Retail inflation rose to 5%, but that's lower than what the street was expecting. And the biggest drop came in food inflation, but the May industrial output disappointed. Joining us now is A. Prasanna, Chief Economist of ICICI Securities Primary Dealer. Good morning, Prasanna. Thanks much. We already saw a big rally in bonds yesterday. Now with this lower than expected inflation number, you think we are good to go for more on the bond markets?
It's possible. I think the rally was mainly premised on the lower crude prices. And that trend seems to be continuing. At least crude hasn't gone back up. But as far as inflation data is concerned, yes, like you pointed out, it was lower than our estimate as well as the street's estimate, largely because of food inflation. But core inflation is around 6.5%. pretty much in line with what we had estimated. And so, I mean, going back to the June policy when the MPC hiked rates, they explicitly cited core inflation as one of the reasons, and how the compositional shift in inflation had driven that decision. So from that point of view, I would say that, I mean, again, the inflation outcome was also a mixed bag. The worries about core inflation would still persist. Although on the most recent reading, the momentum seems to have slowed down, but still in the last 3 or 4 months, we have seen a significant rise across all categories within core components.
So with that spike in retail inflation, Prasanna, should we expect a hike from the RBI in the August policy?
So, yeah, I mean, we do expect one more hike in the near term, but we do think that they might skip in August and actually hike in October. And, of course, this is a view we had formed up after the June policy itself. And then if you look at the June minutes, you could see that, I mean, they were not in a hurry to hike rates. So it's more of a gradual cycle is what the MPC seems to have in mind. The issue for MPC, I would say, is not so much about the near-term data. It's also about the MSP hikes announced by the government and how it kind of factors into their inflation estimates. Now, we do think that the peak effect of that MSP increase would be around 50 basis points on headline. But there could be lags in how those prices get transmitted to both wholesale and then further on to retail prices. So I think that's a judgment call which the MPC has to take. Given that anyway food inflation is quite benign, and definitely we are grappling with the problem of excess in the country.
Okay.
Whether the MSP shock will transmit quickly or it will be a delayed transmission.
Fair enough. Prasad, just one quick word, 7.7 today, or at that, by 7.75 people will start selling bonds?
I mean, our range for the year is 775 to 8 quarters.
All
so, I mean, the issue is, I think, the fiscal risks are still there and supply is quite backloaded this year. So I wouldn't get too confident on duration bonds. Sure. But in general, I agree, yes, the sentiment is better.
All right, Prasanna, thank you very much indeed for joining us. Yesterday, it was a very scathing comment on state finances from the RBI. They're really worried about state government finances. So maybe, therefore, a rate hike could come in August. But really, the story of the morning continues to remain this Fortis deal. Finally done, we hope. There'll be no hostile bids. The board has approved the binding proposal from IHH Healthcare. How does this change the healthcare landscape? We are joined by a very important person from the hospital industry. Shobhana Kamineni, Vice Chairperson of Apollo Hospital Group, joins us on the phone line. Shobhana, good morning and thank you very much for joining us. Well, IHH has been present, but now it comes as a bigger force. Does that change the grammar of competition for you, makes it way more competitive?
I think IHH has been very brave in this acquisition because they're still struggling with the last couple of ones they've done. And you know, we do have good relations with them because we have a 50-50 JV. The best performing is our hospital in Calcutta. So this was a brave acquisition. I'm glad for Fortis and for the healthcare sector that this is behind. I mean, that they can put this behind because the industry needs strong players. This is a difficult time. India needs more and more healthcare infrastructure. So those that can come in and provide it long term are required for the country.
Okay. Shobhana, hi, good morning. Especially in the diagnostic space, the competition seems to have picked up quite a bit lately. How do you think IHH could change things henceforth? And what do you think the initial problems of penetration could be as IHH enters?
Hi, Sonia. I think that IHH really needs to understand this diagnostics business because SRL is a great asset. It has super potential. Because if you see the other players, Lalpath and Metropolis, they're all doing very well. There's an opportunity for them to grow very fast and consolidate. It's just that they have to look at it very differently from the hospital. So IHH needs that kind of lens. Let's see. We have to wait and see whether they can make the best use of that, of that You know, that it's really to that.
I take your point. The diagnostics field is so very different in India, and from an IHH perspective, it will be a new learning altogether. But what about the problems in Delhi itself, Shobna? As you correctly said, it's a brave acquisition. Do you think they'll be able to meander through the demands in terms of price, cost per patient that the Delhi government also perhaps is looking into?
You know, I think that all of us in the healthcare space are taking a slightly longer-term view. One is that there is a huge dearth of good, high-quality facilities in India. So people like IHH are very committed to that. So I think that's a good thing. We have to look at the positives of it. In the short term, whatever the healthcare industry is going through, I think that it'll all level out. One thing is that we must have firms that for their that patient care is above everything and outcomes. And I think that IHH is a good partner in that. So that way, it's Fortis has landed in safe hands. It's just that IHH needs to be again brave. They have so many acquisitions. So so much of their attention is on India, which contributes only 6% of, because their other healthcare assets are doing really well.
Yeah, that's true. Actually, so, as someone was earlier also telling us, it's good that the deal did not fall into the hands of investors who've been in it only for short-term financial gains. And now we have a huge player coming in with so much experience. But I just wanted to get a sense from you on what the texture of this industry could look like over the next 2 to 3 years. Do you see a lot more consolidation coming up in the hospital space?
I think so. And whereas I would really like to have seen more greenfield projects coming up, because that's what we need. But I think there's, the way the industry is at this time, it will probably be players who are less, who require certain bolstering up. So there might be more consolidation as we see it going forward.
Okay. All right. Shobana, we'll leave it at that. Thank you so much for taking the time out and speaking with us on CNBC TV 18. So this is a great asset and a great player that has come into this business now to take things forward. So it's good to see.
Too much competition, as she says, that they already have a 50-50 JV. So she kind of knows them. As partners. Oh yes, previous relationships with them. Yes. All right, so that's about the Fortis IHH deal. We'll take a short break. We'll come back with the pre-opening rates. Also, SP Tulsian of sptulsian.com will join in to analyze all the long-term stock ideas for you.